Hello, good evening from my time here in Nigeria. My name is Pharmacist Jacob Daudawari. I'm a trained pharmacist and a forex trader. Today, I want us to discuss about three major concepts in forex trading that when we add to our own confluences, when we know about them, it will help us survive long time in the market. It will increase our profitability too. And then, of course, it will help us to know the right lot size to place in our trades. These three concepts are risk management, trade management, and money management. Now, without knowing these three basic concepts, I may likely call you as a gambler in the financial market because you must know about this risk management before you place a trade using the right or the appropriate lot size. If you are not aware of risk management, whenever you are placing a trade, you will just place it using your own emotion, placing any kind of lot size that comes to your mind. And as we all know, that the market does not just move straight if it's going upward, or does not move straight downward if it's moving downward. It moves up aggressively, retrace a little bit to gather momentum, move up aggressively, retrace a little bit back to gather momentum, move up aggressively, retrace back. So imagine you have $100 account, and then you place a trade with five lot size. Your analysis can be 100% accurate, but because you did not know about risk management and you place a trade having a big lot size of five, in the process of the market retracing before moving to your own direction, you would have blown your account. So you can see the importance of risk management. In fact, the importance of this risk management, trade management, and money management can never be overemphasized. Not knowing them, you are as good as a gambler not knowing them, because you wouldn't know how much money you are comfortable risking on the financial market. You will just place a trade blindly. But knowing them, you'll be able to know how much money you are risking per trade in the financial market, that it's okay for you to risk. So please, let's pay close attention as we go through it. So let's start with the definition of this concept. Now, risk management involves identifying, assessing, and prioritizing risks in trading and implementing strategies to minimize the impact of those risks on the trading account. That's basically what risk management is all about. It's about identifying, assessing, and prioritizing risks in trading and implementing strategies to minimize the impact of those risks on the trading account. Because the most important thing in forex trading is your capital. You must learn how to protect your capital, because without your capital, you will not live to trade another day. And the market, it always gives opportunities. It always gives opportunity. In fact, it will surprise you. Whenever you blow your account, that's the time you will see wonderful setup that you shouldn't have missed. So the market gives us opportunity on a daily basis. So the important thing that you need to do as a trader is to protect your capital. Protecting your capital. And there's no way you can protect your capital without knowing about risk management. And as we all know as traders, we know that forex trading is composed of three major components. We have the strategy, which is 10%. We have risk management, trade management, and money management, which is 30%. And then we have trading psychology, which is 60%. But I tell you, having two and missing one will still make you not to be profitable long time. And that's why you need all the three components joined together for you to survive long time in the market. Just like the human body. Imagine a man with a kind of malfunction heart. All the other organs of the body are doing well. They are performing to the maximum or optimum level. But one of the organ is not doing well. It will affect the entire body. It will show. It will show. It will affect the entire body. So all the organs of the body are important. However small any of them might be, is as important as the bigger ones. And likewise in trading, the risk management, trade management, money management, the trading psychology, and the strategy, they are all important. They are the one that you combine them all together to help you become profitable long time. So how do I do my risk management in on gold, SAUUSD? So after I've done my due diligence by doing my top-down analysis and I've seen all the confluences that I need to see before placing a trade, and I'm okay. For instance, I've decided that this market is going short, that this market is going to sell. Then I'll come to my short uh, instrument, pick it up, and then place it where the market is at currently. And then my stop loss should be slightly above where the market has gotten into recently, slightly above it. So here we have 30.734, 30.734. But in gold, this number of pip is equal to 307 pip. We are interested in the letters before the decimal point and the first letter immediately after the decimal point. So here we have 30.734. So it becomes 307, 307. Now, if we bring it down, we have 18.441. So it becomes 184. We're interested in the first letters and then the letter immediately after the decimal point. If you move it down, you have 7.684. Now your stop loss, the number of the pip becomes 76. You are interested in the number and the first number and then the number immediately after the decimal point. So that's how to calculate the number of pips on gold. So we go back to where it was before initially, 30.734. 30.734. So our number of pips here is 307. 307. So if we are risking 307 pips, we should be able to target times 2 of it. We should be able to target times 2 of it. If we are risking 307, we should be able to target times 2 of what we are risking. So before we even place a trade. So what we are aiming is 1:2 risk to reward because that's what will keep us um, profitable long time. If you are risking one, you should be able to target two, so that if you take 5 trade and you lost three and you want two, you will still come out profitable. So imagine you are risking one to gain one. If you take 5 trade and you lose three and you want to, you come out with negative, you come out with loss. And that's the importance of risk to reward. Always make sure that your risk to reward is 1:2, at least 1:2. And you know, gold can be so crazy. Gold can give you 1:3, 1:4, 1:5, even up to 1:10. That's what gold can do in a very short period of time because gold is very volatile. So if you apply risk to reward of at least 1:2, you will come out successful long time in the market. So our stop loss, number of stop loss pips is 307 pips. So we now go straight to my FX book position size calculator. My FX book position size calculator. My FX book position size calculator to input the number of pips so as to help us know the exact amount of money uh, we are risking on the financial market. If we are comfortable with it, then we proceed to place the trade. So we go to my FX book position size calculator, and then the currency pair, the first one is currency pair, and we are trading gold. Currency pair is gold. We are trading gold. The account currency, my account currency on my MT4, MT5 is US dollar. US can be Australian dollar, it can be Canadian dollar, CHF, Euro, Great Britain, pounds, Japanese yen. So depending on your account currency, you choose it appropriately My own is US dollar. Then account size. Imagine we are using $10,000 account. Then you put $10,000 account, our account size. Now, risk ratio. How much are we risking? How much of this 10,000 are we risking per trade? If you don't know how much in terms of ratio, you can swap with money here. You can just swap with money. Let's say we are risking $100. We are risking $100 to gain $200 if you swap with money. Now your stop loss pips, it was 307 pips. So you put your 307 here. Then this our lot size, it normally comes as 0.001. So you remove the 1. Let it be 0.01. Always make sure that it's 0.01. Then you place your calculate. You place your calculate. Then you check your result. That means we are risking 1% of our account. And then our lot size, we are going to use 0.03 lot size. Our lot size is 0.03 lot size. That's what we are using as our lot size. So if the trade goes in our direction, we are going to make $200. And if the trade goes against us, we are going to lose $100. So that's how to calculate risk management on gold. So let's go back to our trading view. Now the next one I want us to look at is trade management. Is trade management. So what is this trade management? Now, trade management refers to the process of managing a trade once it has been initiated, including making decisions about when to exit or adjusting the trade. So anything you do after you have placed sell or buy is called trade management. Now, normally what we do in trade management, we adjust the stop loss when the market goes in our favor, maybe up to 10 pips, 20 pips. You now bring down your, you adjust your stop loss, you bring it down close to where you have entered the market. Bring it inside so that if the market happens to reverse against you, it will hit you at break even. That's the importance of trade management. Sometimes you can adjust your take profit. You discover that the market is going far, you can shift your take profit longer. That's part of trade management. You can also decide to scale. You scale it by adding another position. The trade goes in your favor, and in the process where it's retracing before aggressive movement, you can add some position. So those things are called trade management. They are called trade management. Anything you do after you have placed your sell or buy in shifting your stop loss into your profit so that in case the market goes reverse against you, it will not hit you with loss, it will hit you at break even, is called trade management. In the process of scaling, you know that the market is going long time, it's going far. Then, as the market is moving aggressively in your direction, by the time it's retracing as usual, because the market does not just move straight, it goes aggressively in your direction, retrace back small to gather momentum, go aggressively, retrace back to gather momentum. When it's retracing back to gather momentum, you can add some positions. All this one is called trade management. When you are applying this long time, there's no way you cannot become successful. So it's important. Please, let's watch this video over and over again so that we can get conversant with what I'm trying to point out and apply them during our trade. It will help us become very successful. Now let's proceed to money management. Let's proceed to money management. Now, money management involves strategies for managing the overall capital in a trading account, focusing on how much to risk on each trade and how to grow the account over time. That's money management. We are interested in how to overall manage our trade, how to overall protect our capital, how to overall grow our account. That's money management. And one important key of money management is your ability to withdraw. Whenever you make money in the market, don't allow the market to take away your money back. Always withdraw, withdraw. cultivate the habit of withdrawing. Withdraw it, put it in your bank account. That's when it becomes yours. As long as it's not in your bank account, it's not yours. So you have to cultivate the habit of withdrawing. It will go a long way making you to become successful in this industry. So money management, you look at how much, or how much, or how much part of the your main capital are you risking per trade. You may say, okay, I'm going to risk only 10% of my capital per trade. That's money management. Okay, in terms of compounding, you can reinvest your profit to grow the account balance over time. That's money management. Withdrawal strategy, planning on how and when to withdraw your profit, is also part of money management. So please, I want us to cultivate the habit of risk management, proper trade management, and proper money management. This component, when we put them together, it will help us to become very successful overall, long time. So if today is your first time coming across my video, please kindly subscribe so that YouTube can recommend it to people that needed it. And whenever I release educative video like this, YouTube can also recommend it to you. Subscribe, please. Like it and share it. Thank you so much, and God bless you. I believe that these few minutes that we have taken to discuss about these three important components has added something to your own confluences, to your own strategy. God bless you. God bless you. God bless you. See you other times. Bye.